Picture this. You have the power to give a 16-year-old a massive, literally life-altering financial head start. Well, that's exactly what a grandmother named Lulu is doing for her grandson right now. Welcome to The Explainer, where today we're diving straight into the nuts and bolts of a strategy that builds what is essentially a financial time capsule. If you've ever found yourself wondering how wealth can be efficiently structured to benefit someone for their entire life, you are absolutely in the right place. Let's get into it. Now, there's a really beautiful idea driving this whole strategy. Quote, Lulu is planting a tree today that her grandson will sit under for the rest of his life. And, this isn't just a boring old financial policy we're talking about here. It's a living, breathing asset. It's designed to grow right alongside grandson Lopez as he goes from being a teenager into full-blown adulthood and eventually all the way into his retirement years.
So what actually is this time capsule? Officially, it's called an F&G Pathsetter Fixed Indexed Universal Life Policy, or an IUL for short. Now, you might be wondering, why start this for a 16-year-old kid? Simply put, because right now, his cost of insurance is the absolute lowest it will ever be. By setting this up today, Lulu is literally locking in that incredible structural efficiency for him over his entire lifetime. It's brilliant. Okay, to really wrap our heads around how this works, especially if you're a young adult looking at this stuff for the first time, let's use a super simple analogy. Think of this policy as an apple tree. The death benefit, the traditional life insurance part that eventually goes to a family, that's the sturdy, permanent trunk of the tree. But the cash value, the actual money accumulating inside the policy over time, well, those are the growing apples hanging right off the branches. The trunk stays rooted securely in the ground, providing permanent shelter and building a legacy for his future family way down the road. But the apples? Those apples represent money he can actually get his hands on and use throughout his own life. Whether he needs a down payment for his first house, an emergency fund, or even supplemental retirement income later on, those apples are right there for him to use while he's very much alive and kicking. So how do those apples actually grow? Well, it operates on this really cool concept that I like to call the shield and the rocket. The shield is a built-in 0% floor. What does that mean? It means if the stock market totally crashes, his cash value will never, ever drop below zero. His money is completely protected from those market losses. But then you've got the rocket. During strong market years, his cash value captures the upward growth of an index, like the S&P 500, up to a certain cap, which is currently illustrated around 12%. Basically, his money rockets up when times are good, but is completely shielded when times are bad. It's the best of both worlds. Now, when it comes time for him to actually use that cash value, he's got two main choices. A partial withdrawal is literally like permanently picking an apple off the tree. It's his, sure, but it's never going to grow again. On the flip side, a policy loan is like renting your own money. If you take a variable loan, you're borrowing against the cash value at a capped interest rate. But here is the real kicker. Your actual apples stay on the tree. Your full cash value stays inside the policy, continuing to earn those index credits in the market. So your money just keeps compounding and working for you behind the scenes, even while you're out there spending the loan. So Lulu definitely knows she wants to set this up, but she was kind of weighing two different funding options. She initially asked about doing a $25 a month contribution, but we looked at the data and brought an alternative to the table. We had to ask, what happens to this entire financial vehicle if she just bumps that gift up slightly, going from $25 to $50 a month? Let's break this down. Over 49 years, paying $25 a month means Lulu puts in a total of $14,700. If she pays $50 a month, she puts in $29,400. Now, you'd logically think the end results were just double, right? But they don't. The cash value at age 65 jumps from about $39,000 all the way to over $163,000. And the total tax-free income paid out during his retirement, that rockets from $92,000 to over $422,000. That $50 a month mark is an absolute sweet spot. It clears the base cost of the insurance policies so much faster, which allows the compound interest to just catch fire and dramatically accelerate the rate of return. To put that into perspective, the difference really boils down to this staggering number right here, $330,141. By making a tiny, genuinely tiny lifestyle adjustment, literally sacrificing maybe 2 fast food meals a month to find that extra $25, Lulu is gifting her grandson an additional $330,000 in lifetime tax-free income. It's wild. It is a brilliant example of how early, consistent, and just slightly optimized funding can totally alter someone's financial destiny.
I mean, we are talking about an incredible 14.4 times return multiple. Just let that sink in for a second. A total lifetime investment of $29,400 turns into a massive $422,616 of tax-free income paid right back to Grandson Lopez over his retirement years. Absolutely incredible. So let's map out what this growth journey actually looks like for him in the real world under that $50 a month plan. By the time he's 26, so a decade from now, he already has $4,700 in accessible cash value. By age 46, right in the busy middle of his career, he has over $38,000 acting as a massive safety net. And then by age 65, his cash value sits at a robust $163,190. And you know what? This is the exact moment the script flips. The accumulation phase officially ends and the income phase begins. Looking right at the official illustration, you can pinpoint the exact turning point. At age 65, Lulu's premium payments stop completely. Not another single dime has to go into the policy. Instead, the policy starts paying Grandson Lopez. He's going to receive $16,905 completely tax-free every single year for 25 years. It essentially becomes this highly reliable private pension that he didn't even have to fund himself during his working years. Now, we all know life isn't just a straight, predictable line. As much as we love looking at a flawless, perfect retirement trajectory, we have to pause and ask the tough questions. What if life throws a major curveball? What if Grandson Lopez gets seriously ill in his 30s or 40s, long before he reaches retirement age? Well, this brings us to what is arguably one of the most powerful features of modern IUL policies, which are the built-in living benefits. These are included at no additional premium. Basically, if Grandson Lopez were to suffer a critical illness like a heart attack, a stroke, or invasive cancer, or if he's diagnosed with a terminal illness, these riders allow him to access up to 95% of his death benefit while he is still alive. He can use that money to pay mounting medical bills, replace his lost income, or even seek out experimental treatments. The core takeaway here is just incredibly empowering. You do not have to die to use this money. That completely shatters the old-school, traditional perception of life insurance as just being some payout for a funeral. Lulu hasn't just bought life insurance. She has purchased a highly versatile, active, living asset that actively protects her grandson through every single unpredictable phase of his actual life. Which brings us right to our final thought. Lulu looked at a 16-year-old boy and saw an opportunity to change his life forever, starting with just $50 a month. She literally planted a tree today that's going to offer him shade, apples, and rock-solid security for the next 8 decades. So the question I want to leave you thinking about today is this. What kind of tree will you plant for your family's future today? Thanks so much for joining me on this explainer. I really hope this deep dive of the mechanics of the F&G Pathsetter IUL has been as fascinating for you as it was for me.